A delisting determination notice. The moment you see those words, you realize you did not buy a technology story. You bought a probability tied to an exchange decision and a calendar. That is what makes this kind of ticker frightening. For names like this, procedure can move price more violently than performance ever will. On 2025 12/4, NASDAQ ticker STAI, Scantech AI Systems Inc., headquartered in Beaufort, Georgia in the United States, put that reality on full display. The regular session closed around $0.31 after a surge in the 30% range. After hours, it pushed toward $0.35. Volume reached about 27 million shares. In a microcap, that kind of volume usually looks less like a rediscovery of intrinsic value and more like traders repricing an event. The company says it builds CT-based security screening equipment and AI-based interpretation solutions. It points to airport baggage, port and border cargo, and critical infrastructure like nuclear and energy as key markets. It was founded in 2011. The headcount is in the mid-teens. Market cap sits around $20 million. Annual revenue is in the low single-digit millions of dollars, while annual net loss is in the tens of millions of dollars. The 52-week range stretches from the high teens in cents up to the low double-digit dollars. Those numbers push every investor toward the same uneasy question. Is this a company that survives by selling product or by navigating financing and events? Recent price behavior suggests the second question is dominating. The mystery becomes sharper when you compare it to how a normal public company is expected to operate. Under normal conditions, a US-listed company files quarterly reports on time, including the Form 10-Q, and investors use those filings to verify revenue, costs, and cash flow. When a filing is delayed, companies typically explain why and offer a concrete plan for when it will be filed, because market trust and financing terms depend on clarity. With STAI, the market has felt a gap where it wants crisp numbers and crisp timing, and that gap invites speculation. Once speculation replaces measurement, volatility expands, and the ticker starts behaving like an event vehicle rather than a business vehicle. The first major link in this chain lands on 2025-7/9. The company disclosed it received a NASDAQ notice for failing the minimum bid price requirement after the closing price stayed below $1 for 30 consecutive business days. Normally there is a compliance window, and the most straightforward path is business progress that lifts the price back above $1 for the required period. But microcaps often struggle to regain altitude through fundamentals alone. Liquidity is thin,